Meme coins have continued to be the zeitgeist. I don't think that's surprising when you look at the fact that we might be in a fiscal driven regime with no one in the driver's seat. Government spending's out of control, interest payments are out of control. Like when things stop making rational sense, it's rational to start looking at assets that might be irrational. I know that's a bit funny.
It's Monday, June 17th, and this is Markets Daily, a show where we get into the minds of some of the smartest investors, CEOs, analysts, economists, professors, people who are looking at strategy, and everyone in between. If you have a hot or smart take, you are always invited to the Markets Daily show. Welcome back to our daily programming, and thank you for tuning in to hearing some of the best markets-related discussions we had at Consensus 2024 over the past couple of weeks. We are back in action with our daily interviews now. Now, before we get into today's discussion, let's take a look at what's going on in the crypto news this morning. The biggest cryptocurrencies fell during the European morning, extending the subdued mood after the Fed trimmed interest rate cut expectations on Wednesday. Bitcoin and Ether both fell around 1% this morning. The largest cryptocurrency by market cap, Bitcoin, has been trading between the $72,000 and $65,000 range for the past month. Meanwhile, CoinShares says that Bitcoin investment products saw a total of $621 million in outflows last week. And according to JP Morgan, US listed Bitcoin miners reached a record total market cap of $22.8 billion, meaning that mining stocks outperformed Bitcoin in the first half of this month. Joining the show now to unpack the crypto markets is Intuition Head of Strategy and Operations, Matthew Kaye. Matthew, welcome.
Good morning, Jennifer. Thanks for having me.
All right, a lot happening in the markets this morning. As you heard, we have been off for the past 2 weeks listening to some of the great conversations we had at Consensus 2024. I just want to get a broad view from you this morning. What are you paying attention to in the markets?
Yeah, great question. And I guess welcome back, everybody. I'm going to call this market just continued chop solidation summer. We've seen very similar sideways price action almost every summer in the crypto markets, with the exception of the COVID-19 summer, with so much stimulus and liquidity being pumped into systems. So I'm not necessarily in a rush to make moves, but I'm also not necessarily panicking here either. I think it's a very good time to be a patient buyer. And of course, Bitcoin has been one of the top performers of this cycle, but by no means do I think it's the only thing to be looking at right now.
When we look at some of the trends that have happened in the past, this year has been a little different because we had the approval of the spot Bitcoin ETF. The market has felt different this year. That's the general consensus I get from folks who I talk about the markets with here on the show or outside at events. Is there anything different you're looking at this year because of the events that have happened?
Absolutely. There's been a number of structural changes to Bitcoin that I think go largely unappreciated, at least by the quote, crypto natives who are spending most of their time looking at this asset class. The first being the mining Bitcoin China ban, which happened some number of years ago. However, we've seen like a large inflow of capital into US-based mining companies. So why that's important is US miners generally hold their Bitcoin on their balance sheet, as they're able to tap public debt networks for capital financing. So they don't have to sell as much Bitcoin. So the supply side of the Bitcoin market is a bit different. The ETF, of course, is going to be the other side of that equation, the demand side. We now have a large liquidity fire hose hooked into Bitcoin that Bitcoin has just quite frankly never seen. And for those who are paying attention, we know that the Bitcoin ETF listing has been the largest, fastest, most successful ETF listing in history. I think it's easy for folks who might be a bit too zoomed in to see that as a potential near-term headwind, thinking that we might have gone up too fast too soon. But I think the fact of the matter remains that we are likely in the setup of that Bitcoin ETF trade. And what I mean by that is, first, that infrastructure has to get laid, approved, et cetera. We've seen that happen. Then people will front run those flows. We've seen that happen as well. But now we sit and wait, and we essentially are waiting for an extreme macro catalyst. And I think that's going to take the form of a fiscal driven catalyst. I think you started the show talking about the Fed and not changing interest rates, et cetera. And a lot of people are still looking at the Fed and interest rates, right? They're looking at monetary-driven signals. And I believe you will be better off recognizing this period of time as a transition from a monetary-driven regime into a fiscally driven regime. And I'm happy to go into that a bit further.
I want to talk about that in just a minute, but you brought up mining stocks. I also mentioned that at the beginning of the show. Are there any particular mining stocks that you are watching this morning? And I guess on the back of that, are you surprised to hear that mining stocks outperformed Bitcoin itself for the first half of the month?
So you really have to peel some layers back to that. The reason the mining stocks have done, or have had multiple surprises, I'd say, over the past 6 months, is the initial surprise, and this was back in 2023, was that Bitcoin ordinals, which was like, call it JPEGs on Bitcoin. There are other use cases there as well, but not to go into detail on those, provided a huge boost in Bitcoin miners' revenue. That was largely off the radar of TradFi, right, off of Wall Street. Similarly, in 2024, some of the Bitcoin processing power is switching over into the world of AI. And that was another surprise for Bitcoin miners, is that they're no longer, quote, exclusively Bitcoin miners. They're now also using some of their computation in AI. So I was not surprised that it outperformed. Was I in that trade? No. But for those who were, hats off to you. I think that was quite smart.
All right, let's get back to our macro discussion now. I know that you say that the monetary driven regime is not something that we should be watching right now. We should be watching a fiscally driven regime. What do you mean there?
Yeah, great question. So essentially from 2008 until today, call it, we've been paying very close attention to central bank policy, monetary-driven policy, essentially how liquidity will increase or decrease within the U.S. banking sector and all of the subsequent places liquidity flows to from there. That's been great when the majority of liquidity has been coming through the banking system. But when a fiscally driven regime starts to take over, the liquidity is coming more so from government spending. I guess the best analogy is if you're in a car going too fast, and in this case, the driver is fiscal, and all the Fed can do is control the radio. It doesn't matter how high or low they turn the volume. It doesn't control the gas or brake pedal here. And that's what we're seeing in what I would consider this transition into fiscal. The Fed can hike more, cut more, but no matter what they do, it's going to be stimulative. And the reason being is that we are seeing over 250 billion in interest payments per quarter being covered by the U.S. government. That's pretty much 25 cents on every dollar of tax revenue going to interest expenses. And those are going to treasury holders, right? So people holding treasuries are getting more dollars. That's going to introduce liquidity. If inflation continues to creep up or even stays where it is, and the Fed decides to hike rates, they are not going to have an influence on the amount of fiscal spending taking place at the government level. What they will be doing is increasing the amount of interest that treasury holders receive. So they'll just be introducing more liquidity into the system. Similarly, if they cut rates, and I think this is why they're being quite slow and intentional about cutting, is they'll also have a stimulative effect. They'll start to free up capital. It will start to become a bit cheaper to borrow again. And we'll just sort of have money coming into the system from lots of directions. And that's why I laid out this concept that we're more so in the beginning of that Bitcoin ETF trade, because at a certain point in time, the knowledge that fiscal's in the driver's seat, we have pretty much unchecked spending, and we have way too high interest payments, will start to catch on. And that's when people really start to pay attention to the fact that their purchasing power when holding dollars continues to fall. It's when people start to realize that the US dollar as a global reserve currency might fall into question. And we have to understand that fiat currencies largely rely on sort of a collective belief that they are valuable. And if that starts to erode, you can have some really scary effects where what we have known for our lifetimes to be very stable currencies to actually start to act like emerging market currencies. And if that starts to really take hold, Bitcoin, that Bitcoin ETF is just going to see, I think, tremendous inflows.
Well, tell me a little bit more about that. How do you think we should be looking at government spending? And given what you've said, will the Fed have as much of an impact on the economy as it did in previous years?
Yeah, great questions. I think the Fed is largely in the passenger seat with the rest of us. There might be some levers that can be pulled along the way. At the very least, they'll be able to help direct sort of the collective conscious, like the collective belief system. And for that, that type of forward guidance, that can have a real impact. Um, I don't want to sound alarmist because I don't think there's any reason to be alarmed, but I think it's important to understand the fiscal regime as something that's a bit more complex than any one factor. It is decades of policy. It is compounding unintended consequences from term lengths to inability to regulate certain industries to certain industry or regulatory capture to unchecked spending responsibility. Like there are just so many compounded mistakes that I don't think there's really anyone in the driver's seat for fiscal. There's no one bad person to point a finger to. There's no one mistake that can be pointed to. But quite frankly, we found ourselves in a situation where we're spending more and more money. Those interest payments are going up and up. There's no social desire for austerity. So I don't think we're going to see drastic decreases. We have certain commitments in terms of like federal safety nets that I don't think are going to be going away anytime soon. And then we have the Bank of Japan to point to as sort of this smokescreen to say, oh, actually, it can go like this for quite some time. No reason to be concerned. So it's hard to really try to boil down where fiscal's going. And I think the best thing you can do is sort of simplify your framework. Bet that the trend will continue, increased fiscal spending, and position yourself accordingly for continued purchasing debasement.
Well, tell me a little bit more about that. If you were allocating funds this morning, what would you be paying attention to?
Yeah, I would be sitting on my hands for a little bit longer, quite frankly. But I can tell you what I do like and what I think is interesting. I think anybody paying attention to the general crypto news cycle is hopefully aware that the ETF should be listing. It seems at some point this summer that was explicitly stated by the SEC. It might be as early as end of June. The Bitcoin ETF saw tremendous inflows. I do not think the ETH ETF will come close to those Bitcoin inflows, but I also wouldn't be surprised if it sees some healthy allocation. But I think that's much more of a wait and see approach. I don't think there's a lot of front running of the Ethereum ETF. So if that ETH ETF starts to see some strong inflows upon listing, that's absolutely an asset to buy and hold for some time because it's quite under allocated outside of the crypto native world. So that should be really good. Similarly, what we might consider ETH high beta, which should do quite well. Now, on paper, that might look like the Ethereum layer 2s, like Arbitrum or Optimism. Those trades haven't showed much strength. Optimism definitely shows more strength than Arbitrum. I think one of the best pair trades of this past 12 months has been short Arbitrum, long Optimism. And Optimism, I think, actually has another unlock today or yesterday, roughly 100 million in USD value unlocking. So that's another headwind for Arbitrum. Where things start to get interesting, and this might sound childish, but it shouldn't be to any objective market participant, is that meme coins have continued to be the zeitgeist. I don't think that's surprising when you look at the fact that we might be in a fiscal driven regime with no one in the driver's seat. Government spending's out of control. Interest payments are out of control. Like when things stop making rational sense, it's rational to start looking at assets that might be irrational. I know that's a bit funny. So meme coins are interesting.
Are not a childish thing on this show, Matthew. It's okay.
I love them. So maybe I'm just, protecting my own ego. But yeah, I think high beta Ethereum meme coins, especially for somebody who's looking for higher risk and greater outperformance, are extremely interesting. The largest for the Ethereum network would be Pepe and Mog coin. Both of those I think are extremely interesting. Mog actually really stands out in my mind. I don't know if you've seen them. They're like these Pit Viper sunglasses. They're reflective. The reason I think they're interesting is the term like Mog and Mogging has been like very viral amongst Gen Z and the TikTok generation. the mirrored glasses are like very much in vogue all over the world. You can go to like Bali or Ibiza or LA, New York, Miami, and you'll see people wearing them. So you have, and you're actually also seeing them as part of like this moderate to moderate conservative political movement. There is a very famous video that came out from the Mar-a-Lago former President Trump event where somebody asked a question about crypto and was wearing the Pit Vipers. So it's definitely embedded itself in the political culture, in the online culture, in the physical culture, and it's valued significantly lower than Pepe. So in terms of the Ethereum meme coins, I find that to be extremely interesting, especially if that ETH ETF is going to see inflows. But on the topic of meme coins, which I find so interesting, and I can get into that thesis in actually a bit more detail because I've thought it through for a number of years, is that while the high beta Ethereum-based meme coins should outperform during that ETH ETF inflow period, I think you don't want to ignore the Solana-based or even the Ethereum layer 2 meme coins either. There's a lot of discussion inside of the crypto space about the Base network. So for those who don't know, Base is the Ethereum layer 2 essentially run by Coinbase. It does not have a token. It has a lot of mind share because it will be launching the Coinbase Smart Wallet. And the Coinbase Smart Wallet makes it very easy for Coinbase retail investors to move their capital directly on chain. So we saw a very similar dynamic a cycle ago with Binance and Binance Smart Chain, where Binance was making it extremely easy for their customers to move money onto Binance's blockchain. And we just saw a ton of speculation taking place on Binance Smart Chain. And for that reason, I think that we could see similar effects in the Coinbase Smart Wallet to Base Network integration. There's some names that have done quite well. Brett has been the top performer, although I think it's purely a momentum-based trade. There's not much, call it culture or community there. My investment thesis with meme coins is very simple. You sort of bet on cults. You bet on communities who are completely irrelevant to price. You bet on communities who are grounded in some type of basic ideology or some type of basic thesis as to how the future will unfold. My favorite is there's a coin called, they call it a Black Rock on Base, Black Rock. And its ticker is just Rock. And that's one of those cults that I find quite interesting, specifically because their thesis is, it's kind of tongue-in-cheek, right? There's no coin for the Base network, and there's no coin for BlackRock. And BlackRock's official custodian is Coinbase, and BlackRock's on-chain fund is called BUIDL. So if you kind of start to connect the dots, maybe you're somebody who pays attention to like Wall Street bets, or maybe you're somebody who pays attention to like liquidity if you're familiar with those social media accounts. I think like the Rock meme coin could kind of start to wiggle its way through the zeitgeist that way. And then last, I'll touch on the Solana meme ecosystem because the majority of trading volume is taking place there. The Phantom Wallet has really performed well in the App Store as well. So we know that retail enjoys speculating on Solana. There, I actually have one meme coin that I think is extremely interesting. It's called Geeko. And Geeko is the oldest cat meme on the internet. And actually, this will be a beautiful segue into why this is all culturally relevant. Geeko was born out of Japanese forums in 1998. It became like the de facto meme of 2chan, which was like the most successful forum at the time. And what's remarkable about Geeko is not only does its creative rights already belong to the public commons, but it has multiple decades of content. In English and Japanese and other languages, it just has an overwhelming amount of games that have been developed, cartoons, comic books, stickers, memes, like the amount of, call it lore, that exists within the Geeko ecosystem already is massive. And there's only other two memes that have similar provenance, and that would be Pepe, which I believe became a meme in 2008, and Doge, which I believe became a meme in 2013. So that's really amazing company for Geeko, right? Like to be 1998 among those peers. is something quite remarkable. And I'm happy to go into like the cultural thesis about this. I think it's actually very important, especially with that backdrop of increase sort of liquidity, especially from like an irresponsible spending perspective. But I also don't mean to make this all about a memes by any means.
I love when it's all about the memes, honestly, Matthew. So thank
Mhm.
you for bringing that up. And I would love to invite you back another time to dig a little bit deeper into the cultural aspect. But we do have to wrap soon. So the last thing I'm going to ask you is I was reading an article this morning that you were quoted in, and you said that we could hit $100,000 for Bitcoin this year. Talk to me a little bit about what went into that prediction and if that still remains true this morning.
Yeah, it absolutely remains true. I'm definitely a very eager buyer of Bitcoin. I think anything under 64,000 is likely an opportunity. I think we'll see people get reflexively bearish if we get down to 60,000. So I'm happy to be a buyer there purely because I think government spending is not going to get better. And I also like being long Bitcoin going into the election, and I like being long Bitcoin coming out of the summer. To kind of touch on that quote, I think Bitcoin over 100K this year feels really good. And I think the question that I'm asking myself is more so, when and how is Bitcoin trading above 250K, right? Is that taking place over the next 18 to 24 months because things are going to become really irresponsible at the government spending level when people are going to catch on? Or are we going to have a bit of consolidation, maybe a bit of a pullback in 2025 or 2026, and then that next rally that's really ETF driven takes place? I don't have the answer to that. The time aspect is a big question mark to me, but I'm much more interested in talking about Bitcoin around those price levels and starting to price it against gold as a macro asset than I am asking like, oh, is Bitcoin going to go up from here over the next 6 months? Like, yeah, probably. It looks really good. It's about the right time.
Matthew, thanks so much for joining the show this morning.
Of course, Jennifer, thank you for having me.